Last year, UK businesses overpaid corporation tax of £14.2 billion. But why is that? Because the UK tax system is complex and people don't always know all the expenses that they can be claiming. Meanwhile, the top 1% of largest businesses have in-house tax teams and they have access to the best advisors, so they know how to pay as little tax as possible. I'm an accountant and I've worked in tax for over 10 years for some of the UK's leading tax practices. In this video, I'll tell you 10 of the largest expenses for businesses that you should be claiming in your company's tax return. By the way, if you're new, I make videos about the UK tax system, so if that sounds good, then make sure you subscribe. First of all, what do we mean by a tax write-off? A tax write-off is a cost directly related to running your business, and the proper term for it is a tax-deductible expense or an allowable expense. And an allowable expense can be deducted from revenue when calculating your company's taxable profits. So now let's talk about 10 of the biggest allowable expenses for most businesses. First, I want to talk about accounting and professional fees. Accounting and professional fees are a huge cost for most businesses, and where those costs are incurred wholly and exclusively for the purposes of the trade, and they are to do with the company's everyday activities, those are typically tax deductible. So for most companies, that would include costs like your accountant's fees for preparing the company's annual accounts, the tax advisor's fees for preparing the company's annual tax return, and also the solicitor's fees for handling things like trade disputes and rent reviews. Anything that is capital in nature is not tax deductible, or anything that's not to do with the company's usual activities. So if the company incurs fines or penalties, those are not tax deductible. And if you decide to change the company's structure, so maybe you merge with another company or you want to dissolve a company in the group, those are not typically tax deductible because those are capital in nature. Next, pension contributions. Pensions are an allowable business expense. So as a director, you can pay money into your pension and that will be a tax deductible expense for your company. The limit is £60,000 a year. So it's potentially a very tax efficient way to extract money from your company as a director. And then if you employ people in your business, the contributions that you make to their pension pots is also tax deductible. Just be aware that there is a wholly and exclusively test, which means that you cannot make unreasonably large contributions. For example, if you were to employ your children in your business, you can't make unreasonably large contributions for them into their pension pots and expect them to be tax deductible. If you clicked on this video, you are likely to be running a successful business, and that's why I want to talk to you about Revolut Business, the solution for managing your company's finances using only one business account. As your business grows, it's really important to keep it efficient. So as well as making sure that you're paying the right amount of tax, it's really important to make sure that your business's spare cash isn't sitting idly in a low interest account when it could be earning a healthy amount of interest. Revolut Business currently has a savings account that pays up to 3.51% interest, and that interest is paid daily. There are no withdrawal fees and you have 24/7 access to your company money whilst giving your business's spare cash the opportunity to work for you. There really is no minimum limit to start off your savings account, so you can build that cash buffer from day one. So if earning more money on your business's cash sounds good, then click on the link on screen, or you can follow the link in the description. And even better, if you add money to your account before the 30th of September 2025, then you will receive a £200 welcome bonus. This applies to new UK business customers only. Subscription fees and terms and conditions apply, and some features may only be available on certain plans. Salaries are the biggest cost for most businesses. Your salary and your staff salaries are 100% tax deductible, as are the national insurance contributions that are paid over to HMRC. What lots of small companies will do is employ family members, and as long as they are carrying out a genuine role in the business, the cost of their salary will be completely tax deductible for the company. And if they're not earning money elsewhere, then they can also use their personal allowance of £12,570 to essentially set off against the salary that they're receiving from the family company as well. So They could end up not paying too much income tax depending on the level of their salary, and the salary is tax deductible for the company as well. So employing family members can be really advantageous for the family as a whole, but you need to make sure that that family member is doing a genuine role for the company. You can't just put family members through the company's tax return and take that as a tax deduction. There has to be some genuine role that they are fulfilling. Professional fees and subscriptions. If you need to pay a fee to be a member of a professional body and you need that to be able to do your job, then don't forget to deduct that cost from your corporation tax return. So for example, as an accountant, I pay a fee to be a member of the professional body each year, and that's deductible for corporation tax purposes. It will be the same for lawyers, doctors, architects. There's lots of professions that require you to pay an annual fee to be able to carry out your job. If you're not sure if your fee is deductible, then there is a full list on the government website. Next, travel expenses. You can't take a deduction for your everyday commuting costs to your usual place of business, and you can't take a deduction for your employees' usual commuting costs either. But if you had to go and meet a customer or a supplier in a new place, then that cost would be tax deductible. That means the cost of your travel, the cost of your accommodation, the cost of your food, and any other subsistence. But the cost does have to be wholly and exclusively for the purposes of the trade, and there can't be any duality, which means that you can't combine a personal holiday with a business meeting and then take a deduction for the whole thing. And you also can't do any apportionment. So if you do decide to take a holiday at the same time, then the whole cost would be disallowable for tax purposes. I also want to do a quick mention of Revolut Business here because they have a fantastic expense management feature, which makes it really easy to track your expenses when it comes to travel. So as a business owner, you could categorize different expenses like supplier meetings, customer meetings, hotel costs, food costs, and then you wouldn't have to keep the physical receipts either because you can upload them onto the platform, and that can make it very easy when it comes to preparing your company's tax return. Next, bank charges and interest. Bank charges for business banking are tax deductible, so that could include overdraft fees, credit card charges, and loan interest, but it doesn't include the repayment of the loan itself. Next, training costs. Any costs that you or your employees incur in order to be able to develop your skills and your knowledge for your business are tax deductible. For example, if you're a hairdresser and you have a hairdressing business, then any courses that you go on for improving your cutting techniques or colouring techniques would be tax deductible for the company. The course just needs to be directly related to the industry that you're in. Next, bad debts. When a customer can't pay, or if you suspect that a customer can't pay part of their invoice, then that bad debt is deductible for tax purposes. But the reason has to be that they can't pay. It can't be that you decide to waive the invoice because they're usually a good customer. It also can't be a general bad debt, which means that you can't set aside a few £1,000s routinely in case a customer can't pay that year. Next, capital expenditure. Usually capital expenditure is not deductible because it doesn't get charged to your P&L. But there is something called capital allowances that's available instead, and that's a tax relief that lets you set off the cost of certain assets against your revenue. So there's a really generous allowance called the annual investment allowance, which means that you can spend up to £1 million on qualifying capital assets and take a full deduction for those in the year. So for example, if you bought a laptop for £1,000, that wouldn't usually receive a revenue deduction, but you could claim for it under the annual investment allowance, which means that you could take a deduction for that full £1,000 against your revenue, and you could reduce your taxable profits and pay less tax because you're taking a deduction for that asset. So please don't forget to use the annual investment allowance. Next is entertaining. Staff entertainment, so that could mean your annual Christmas party, is deductible for corporation tax purposes. The event has to be available to all staff, and you can't have clients or suppliers there, because then it becomes client entertaining, and that's not tax deductible for corporation tax. So as long as it's a staff party and you don't go over the £150 a head limit, then the cost of the entertainment, the food, the drink, it's all deductible for corporation tax purposes. But don't go over that £150 a head, because then you might make it a benefit in kind. If this was useful, I will leave another video linked on screen all about how to pay yourself tax efficiently as a director. I'll see you there, and don't forget to subscribe.